The latest balance of payments statistics are out today for the December quarter of 2017. Probably the key feature is that New Zealand's current account deficit has widened slightly to $2 billion. The current account's a way of showing how balanced our economic transactions are with the rest of the world. And the main ways that money flows between New Zealand and the rest of the world is via trade, our imports and exports, and also as income from our investments and foreigners' investments in New Zealand. Let's have a quick look at trade. While we exported more than we imported during the quarter, imports still grew by more than exports compared to the September quarter, and this caused our goods and services surplus to shrink slightly to $700 million. Most of the difference from the previous quarter here was due to growth in the deficit in the trade of goods. Part of this was about imports of transport-related machinery and fuel going up, and that outweighed increases in our exports of things like dairy and logs. Investment or primary income is another way that money flows between New Zealand and overseas. In the December quarter, overseas investors earned $4.9 billion from their investments in New Zealand, more than the $2.3 billion that New Zealand investors earned from their investments overseas. This gave us what we call a primary income deficit of $2.7 billion for the quarter. In the bigger picture, New Zealand's current account deficit of $2 billion equates to 2.7% of total New Zealand GDP for that quarter. That's up a little bit from the last quarter, but if we step back, it's been pretty steady since the global financial crisis, hovering between about 2 and 4% of GDP. Expressed in this way, New Zealand's current account deficit to GDP ratio was about the same as the United States, which was 2.4% in 2016, and smaller than Australia's, which was 3.1% in 2016. This is according to OECD data. This is the kind of thing that economists and international credit agencies tend to look at to help decide whether New Zealand's ongoing relationship with the rest of the world is sustainable. The balance of payments has a real impact on New Zealanders' day-to-day experience. It can influence things like the interest that you pay to your bank and what you can buy overseas with the New Zealand dollar.